All right, let's dive right in. Today, we are breaking down the latest numbers from a real heavyweight in the logistics game, Mapletree Logistics Trust, or MLT for short. If you're an investor, you know these quarterly results are where the rubber meets the road. So, let's figure out what's really going on.
So here's the thing that's a little confusing, right? You read the headlines and the company's talking about sustained resilience. But then you look at the key financial numbers and you see that revenue and, more importantly, the money paid out to unit holders is actually down. It kind of feels like they're saying two different things. So what's the real story here?
Okay, to really understand what's happening, you have to look past those headline financial figures and pop the hood, check the engine. And when you do that, you actually find some really strong fundamentals. So let's start there, but the bright spots.
First up is this number, 96.4%. That's their portfolio occupancy rate. To put it simply, that means almost every square foot of their warehouse space has someone paying rent for it. In the world of real estate, that is an incredibly healthy number. It's a huge green flag that says demand for their properties is absolutely solid. And it doesn't stop there. Not only are their warehouses full, they're actually getting more money for that space. This next number, 1.7%, shows their rental reversion. It's just a fancy industry term for rent increases. So when leases came up for renewal, they were able to raise the rent by an average of 1.7%, and that's excluding their China properties. That shows you they've got real pricing power.
So let's just boil all that down. For an investor, what this means is that the fundamental business, renting out big, essential warehouses, is solid as a rock. People and companies need this space to run their own businesses, and they're willing to pay more to keep it. That's the bedrock that this whole company is built on.
And, this isn't just some abstract concept. We're talking about actual state-of-the-art buildings, like this one right here, the brand new Mapletree Jukun Logistics Hub. It's been recently redeveloped, and it's already over 90% full. This is their strategy in action. Build or buy high-quality assets, and the tenants will come. Okay, so that all sounds pretty great, right? Occupancy is high, rents are going up, the core business is humming along, which of course brings us right back to our first question. If everything's so good on the ground, why did the financial numbers take a hit? Well, this is where we have to talk about the headwinds.
And this table really lays it all out. You can see the gross revenue is down a little under 3%. But the number that investors really feel is that amount distributable to unit holders. That's the actual cash getting paid out, and it's down almost 10%. That's a serious dip that directly impacts your returns.
So what gives? If the properties are full and the rent checks are getting bigger, where's the disconnect happening? What caused this drop?
Well, it really comes down to a few key things. The biggest culprit by far is currency weakness. See, MLT operates all over Asia, so they collect rent in Japanese yen, Korean won, and so on. But they report their earnings in Singapore dollars. When those other currencies get weaker, the rent money is worth less when they bring it back home. On top of that, they strategically sold off 12 older properties. That's a good move for the long term, but in the short term, you lose that rental income. And finally, the China market was just a little bit softer, which also contributed.
This is a perfect way to think about it. The currency issue is like a massive headwind. The business itself is running forward, the legs are pumping, but you've got this strong economic wind pushing against you. You're still making progress, but it just doesn't look as fast on paper.
So that really explains the past. But investing is always about looking to the future. So with that in mind, what does the road ahead look like for MLT? What are the opportunities they can seize, and what are the risks they need to dodge?
Well, it's really a tale of two forces. On the opportunity side, the tailwinds, you've got these huge trends like the nonstop growth of e-commerce and big companies diversifying their supply chains into places where MLT is dominant. But the headwinds are just as real. Geopolitical tensions are high, currencies are all over the place, and interest rates, while maybe not climbing anymore, are still a major factor. Those risks aren't going away anytime soon.
So, what's the game plan to navigate this tricky environment? This quote from management really sums it up. They're focusing on what they can control, keeping those occupancy levels high, making sure rents are stable, and keeping a tight lid on costs. It's a classic back-to-basics strategy, just focusing on operational excellence while trying to manage those big external risks.
Okay, so that was a lot to process. We've got a strong core business being hit by some tough external factors. So let's bring it all home. What are the absolute key takeaways for anyone watching MLT from an investment perspective?
There are really three things to keep your eye on. Number one, without a doubt, is currency. You have to watch how currencies like the Japanese yen and Korean won are doing against the Singapore dollar, because that has been the biggest drag on their results.
Second, keep watching that occupancy rate. As long as it stays up there in the high 90s, you know the underlying business is healthy. And third, watch their rejuvenation strategy. Pay attention to news about them selling older buildings and buying shiny new ones. That's really their path to future growth.
And really, it all comes down to this one central question. You've got this incredibly strong, stable operational core on one side, and these powerful, unpredictable macroeconomic headwinds on the other. As we move through the rest of the year, which one of those forces is going to win out? That is the multi-billion-dollar question for every single investor. This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.